you so much.
Good morning, everyone. My name is Desmond, Wong, partner in PwC, specialized in corporate tax and business advisory services, providing services to international and private companies in Hong Kong and the region. So today's panel discussion about investing in Asia, it's I would say it's a pretty wide topic. We can definitely comment in different angles, different interesting stuff to talk with. But today we have very happy to have four distinguished panel speakers here, to mainly working in the finance and investment industry, to share with us a little bit more about their thoughts about investing in Asia, what are the opportunities and risks in the recent market. So maybe I'll just have a quick, opening warm up with you guys. Just quickly round up to introduce yourself, your title, and what are you up to recently. So.
Thanks, Desmond, and great to be here on this great panel. Good to see you guys this morning, and thank you very much for the invitation, Gary. Big part of this Hong Kong community. So my name is Peter Dingle. I've been in Hong Kong for 20 years. Started my career in technology with Intel. Then spent a few years building startup companies with the first accelerator programs in Hong Kong and Singapore, and then joined the bank. So I've been with HSBC for about 6 years, 4 years running the innovation team in the retail bank, and the last 2 years launching the very first asset management venture capital products from it's a GP LPs structure where we're enabling our clients, our institutional investors, to invest in early stage startups. So we're very excited and very bullish about Hong Kong and the Greater Bay Area, and looking forward to sharing some more about that with you today.
Thank you. Hi everyone. Hi, good morning. My name is Kelvin Liu. I'm the Vice Chairman of Tsangs Group. We're a single family office, and I'm also the board member of Hong Kong Investment Club. So, brief intro, right? Okay. So we. Oh, okay. So we have multiple pillars of business in Hong Kong and also for RW, rest of the world. So we're a single family office. We've been investing into early stage technology company since 2005. We like the usual sexy stuff, I would say. AI, robotics, biotech, healthcare, sustainability, mobility. So usually we invest in the early stage, and then we try to help company grow, and also looking for funding. And then we took this company in Hong Kong to go RTO or IPO or in the US. That's the first one. Sorry. So, and then secondly, we set up a non-profit organization called Hong Kong Ambassador Club, HKAC. The objective, mission and vision of HKAC is to promote the good words and good story of Hong Kong. So we are working alongside with one of the, I think, a very senior political figure in Hong Kong. His name is Jeffrey Lam. So yeah, we've been organizing multiple events in Southeast Asia and also in the US and Europe. Thirdly is we have a vehicle. So we've been spending more time in the Middle East, I think, over the last few years. So, and we incorporated a company called BridgeMe. We stand for Middle East, and we've been trying to help companies in Hong Kong as well as Greater Bay Area to tap the market in MENA. And we organized 3 delegations. Last year we signed about 35 MOU. The companies are either listed companies or private companies. So, And last but not the least, very recently, we set up a incubation program called Blue Sky Scaling. The objective of this entity is trying to have a company in Hong Kong as well as from China to first establish the platform in Hong Kong, get the funding from the Hong Kong government, and then try to bring this company abroad to expedite the growth of the company. Thank you.
Hello everyone, I'm Danny Chan from Flair Capital. I'm partner of Flair Capital. Happy to make this share with you guys, and thanks for Gary's invitation. Flair Capital is just set up around a few years ago, and we focus on investing in some startups which is more focused on seed round or angel round. And our portfolio will be more likely in technology, ESG, and blockchain. Also, I have another role, which is I'm a CEO of a technology company in Hong Kong, which is our family business, around 32 years right now. So let me talk about a little bit myself. I worked for Hang Seng Bank around 8 years, and then I back to my family business 4 years ago, and now I'm doing the IT outsourcing company and more focused on this partner in Flair Capital to invest in different industry. So the startup we focus is normally in Hong Kong. As you know, we are set up a few years ago, which is during the pandemic. And also, I also work with some government and some education institution. For example, which is DI. We have set up a JV with them and starting an incubation program a few months ago. So, although our capital company is quite new, however, but we are more execution efficiency, because most of the multi-family office, they have long rundown and schedule they have to follow. And in Flair Capital, we can invest directly, and the consideration time, which is more shorter than with others. So yes, happy to make this share with you today. Thank you.
Hi everyone, I'm Kenix Tsangs. Thank you very much for having me here, and nice to meet you all. I want to keep it short, I don't want to bore you. I come from RainForest Capital Global Company Limited. My company is focusing on family office business. We are actually a single family office business, but we are of a strong family tree, and we have a lot of varieties in our family. So we have lots of members in our office. Before pandemic, we are more focused in China. This is also based on my background, because I have very good connections with Ping An Asset Management, as before 15 years ago, I helped Ping An Asset Management establish in Hong Kong. Because I am, at that time, I'm a UK registered lawyer. So it's my honor to work with Ping An, and we still have good connections, so that they bring me a lot of experience, a lot of human connections in China and Asia. So before pandemic, we focus on China and investments. We invest in multi private equity, and we also a lot of before that we also invested in real estate properties, of course, because Ping An Asset Management, they also hold a lot of like this kind of real estate property. But after pandemic, or is I think it's after post-pandemic, we focus. We want our brand to be more globalized. So we focus to invest in also in AI technology, chemistry, and also go to Singapore to accept an office, and also next round is Abu Dhabi. This is our trend. So we are very focused in asset management as well. Our team actually is all over, my teammate is all over 20 more years in about the banking and also the corporate finance. They are very good at calculating, and I'm not good at calculating, I'm good at negotiating. So our team is a strong team to have a banking and financial background. Just as our company basically doing this kind of investment, we also invest in other first round and angels funds areas. So this is our focus areas. So I just only want to keep it short. Nice to meet you all.
Thank you for all the introduction. Perhaps I heard about the phrase family office many times from our panel speakers. So perhaps let me go with Kenix first. Maybe with two questions since they only may be here. We heard about family office all the time in Asia. Obviously, Hong Kong is definitely one of the popular destination for family offices to settle here and expand the business. But we also know that Singapore is doing quite a lot of things in the region, and we are basically competing, attracting different high net worth individuals to stay in Hong Kong and Singapore, and many stakeholders in the region also offer a wide range of services to different family offices in Hong Kong and Singapore. So I think you also briefly mentioned to me before this panel discussion that Likashing, one of the richest Hong Kong's tycoons, has also expanded the family office to Singapore. So two questions. So is Singapore, really outpacing Hong Kong as the destination of the global elites family office invasion? And what's the general opinion on Hong Kong's future as a financial center?
I want to 100% say this, but practically they are, I can say most of the investors are not confident on Hong Kong at this moment is slightly shifting to Singapore. Do you think that about Singapore is more stable? I think last example is the political stable. And also the government also has a lot of policy, like the taxation policy to the corporate to go in there. Is a lot of convenient and also competitive to Hong Kong. So I can say that Hong Kong is really facing difficult challenge right now. Especially we also want to establish in Singapore. Also have our second launch, the family offices there. But I can't say about these because Hong Kong still have our strong strength. Of course, we have a deep pool of the capital markets connections in the worldwide of so many years. I can't say Hong Kong is good or actually Singapore is better or worse than Hong Kong or whatever. But I can say this: if you want to enter into China, Hong Kong is still a very good gateway to go into China. And if you go to South Asia, so I think Singapore is better than Hong Kong to go to the gateway. So you just need to see the investment dynamic markets to see what they are just looking for to decide which area to what they want to invest and what the confidence they are based on to choose the different regions.
Okay, thank you. So definitely we have different strengths in that. Absolutely, Kevin, please.
Sure, I totally agree with what Kenix said. I just want to share a bit of my own personal experience over the last 2-3 years. I've been to Singapore multiple times. So yes, Hong Kong, I think globally we were under the COVID pandemic, and Hong Kong was under the severe lockdown. So because of that, I think a lot of the investment company moved to Singapore. from Hong Kong. That's number one. Number two, I think we have all witnessed the unfortunate lockdown in China, particularly in Shanghai, and because of that, I think again some of the Chinese mainland hot money moved to Singapore. Okay, so I think whether Singapore has or is going to outpace Hong Kong, I don't think so. Okay, and first and foremost, I think Hong Kong and Singapore has been playing very different roles in the region. I mean, Asia-Pacific region. Singapore has been more as a gateway for Southeast Asia. Okay, Singapore, Philippines, Malaysia, Indonesia, that has around 220 million population. And Hong Kong has been, as Kenix mentioned, Hong Kong has been a gateway to North Asia, in particular, Hong Kong, Taiwan, China, Taiwan, and also for Chinese mainland. So I think that role hasn't changed. And also my personal experience is that I think currently there are about 600 to 700 family offices on the queue to set up in Singapore, okay, from mainland China, Hong Kong, and also rest of the world. So there's a long queue, right? So, however, for those that I have seen that has already set up the family offices in Singapore, they have the money in Singapore, okay? However, they don't invest. You don't even be able to, you don't even be able to see the C-suite, the CEO, the chairman, the founder, whoever, right? They just park the money there, and nothing happened. However, I think in Hong Kong, for family office in Hong Kong, I think for a vast majority of them, I think we still have an operation, we will still have the team, and we're still investing. Okay? And last but not the least, I think Singapore is more a hub to Asia or Southeast Asia. But in Singapore, I'm not going wrong. In Singapore, there are not much that you can invest or do, right? So yeah, so I think that's the key difference. Money there in Singapore, but not much happening. But in Hong Kong, even though maybe we are losing a little bit of the liquidity to Singapore, but I think that will come back very soon. Yeah. Okay. Thank you.
Thank you. So basically, we are still very optimistic about Hong Kong's future from a family office perspective. So I heard about investment. So maybe I'll pass the time to Peter to talk a little bit about investment, because you're in the asset management industry, and nowadays I understand a lot of the investors have the expectations for a lot of the returns, not just from a traditionally angle, but also from whether there's any impact of ESG or SDG. So how do you think about these areas in terms of how do you do due diligence in these angles, and what sort of things that you can give us some tips about?
Yeah, thanks. Look, I think being in the venture capital institutional side of asset management, I think we're sort of long-term investors. So we're doing due diligence on companies that are going to be 10 times, 100 times better in the next 10 years. If over the last 20 years I've been in technology, I've kind of looked at, I think we're kind of in this third, I would say this third era of technology. If you go all the way back to the mid-90s, if you remember PayPal, eBay, and Skype, okay? That was like 94, 96, 98. Those companies came out of Silicon Valley. It was about a year later that the Greater Bay gave us, or the wider China region gave us, Alibaba. Okay. If you fast forward to mid 2000s, okay, the US sort of gave us 3 or 4 new companies. They gave us Facebook, social media, they gave us instant messaging with WhatsApp, and they gave us logistics with Uber. Okay? It was about a year later that the Greater Bay gave us WeChat. Okay? If you look at where we are today, around the mid-20s, okay, we've seen the rise of Tesla, we've seen the rise of OpenAI, and we've seen the rise of CRISPR. Okay, and I'm a big believer that there's going to be a company that comes out of the Greater Bay that's going to combine these 3 technologies. It's not so much about what OpenAI is going to do to destroy your current businesses. It's about when you start to combine OpenAI, large language models, and AI with these other industries that are exponentially growing. And so that's how we think about investing in the future. That's why we are bullish on the fact that, yes, everything's a little bit lulled right now in Hong Kong. China's obviously, going through some rough times. But we believe that family offices or institutional investors that are going to take a long-term investment in technology in Hong Kong are going to be the big winners in the next 10 years. They're going to see a company emerge from this sector where these 3 very exciting areas are, whether it's biotech, whether it's artificial intelligence meets supply chain and logistics, whether it's health tech. There are some amazing sectors that Hong Kong is very good at and very strong at. And these companies will come out of the Greater Bay Area, they'll grow in China, but they'll also go out of China, and they'll grow in Europe, and they'll grow in the rest of the world. And that's what we're super excited about. So when we're doing due diligence, we're looking for the long term. And we're looking at these sectors, these technology sectors that are strategic to Hong Kong and coming out of the Greater Bay.
Thanks, Peter. So I heard about AI, data, and technology would be the go-forward future for a lot of investments. So we have to keep watching about this industry and how it's going to emerge in the region. So perhaps may I go to Benny? So talking about investments, so maybe in the past, we relied on a lot of the traditional investments, stock, real estate, etc. But what about in the fund industry, or what about setting up a structure involving the GP/LP? So I know you're familiar with that. So could you give us a little bit more explanation about what LPF are and how you see about the market?
Yes, thank you, Desmond. So that yes, normally people in Hong Kong will invest in stocks, some bond, or even in funds. Actually, you can buy it in bank or some financial institution, which I worked in Tanzania before. I'm also doing this for my clients. So, but I'm not sure of guys recently our government get a plan which is called CIDS, the 30 million Hong Kong dollar that for the overseas people can move to Hong Kong. So, which is quite attractive plan for all of the family office or like us some investors, because most of them are 90% the fund of the 30 million Hong Kong dollar, they must be used in investment such as the stock, bond or fund or LPF. And then the 3 million will be used for investing in Hong Kong's startups. So that which is, you can see this move, which is our Hong Kong government, which is quite support in our startup or in our the angel or angel investment. You can see our government have do these things recently. And for Desmond, he asked me what is the LPF, because I'm not sure. LPF is it familiar with you guys? The full name is Limited Partnership Fund, which is approved by the Hong Kong government on 2020 around August. So that this is an onshore fund in Hong Kong, and you can use this fund. This fund you can use for investing in the product, the financial product. You can use for investing in different companies. The most attract us is set up a LPF fund in Hong Kong, which is the cost, which is pretty much lower than if you set up a Cayman Island fund or other, for example, the Singapore VCC. Gives you some statistic, around set up a Hong Kong LPF fund, you exclude the audit, exclude the lawyer or RO fee, you can around within 10,000 Hong Kong dollar, you can set up this LPF fund. But if you set up a Cayman Island fund, you must be around 100,000, similar Hong Kong dollar. So that you can see the difference. And the maintenance fee for annually is also the difference. So that also for the efficiency, if you open a LPF and open the bank account for LPF, which is also is more faster than open a Cayman Island fund in the bank. Based on my personal experience, I opened the LPF account in Bank of China. Maybe the lawyer and the banker is not familiar with that because I opened around 2021. So they may not familiar. It takes around 9 months. But once I asked my partner, they have opened again in 2023, which is more short than the time period. So that you can see that the efficiency of opening a fund. As you know, opening a bank account is very difficult in Hong Kong, even though a company, a limited company. So that which I think the procedure will be more and more efficient in the future. So that what is LPF used for on the structure? Normally they include a general partner, which is the most important part in the LPF, and then the limited partner, which is we call the investor. Normally you can have many LP in this LPF, and so you will have to appoint an investment manager to do the day-to-day deal structures, and then you have to appoint a RO. So that this is four people or four entities you have to include in the LPF. So if you guys can, for example, if you guys are much more likely to set up a LPF in Hong Kong, I think the Hong Kong lawyer is more familiar after these 4 years experience. So that yes, thank you for.
Right. Thanks, Benny. So, so definitely there are a number of new schemes, incentives that is being brought by the Hong Kong government to boost the asset management and the investment industry. And what, like Benny just mentioned, there are the new MPF schemes, and also, as I understood from the tax industry point of view, we also have the unified fund extensions, and recently we also enacted a family office tax incentive scheme in Hong Kong as well. So it's at least from my point of view, I can see that there are more tractions coming in to Hong Kong and the region, setting up family office. So maybe I'll just ask one more question. So from a family office development in Hong Kong, what do you think about government sector or private sector? What else we could do in Hong Kong to further boost the market, given that there are different tax and talent incentives policy recently brought to the industry. So perhaps pass the time to Kenix.
Thank you so much. My experience, or what I'm seeking for from the government support things right now is, I think the regulatory support right now for the single family office, from SRC is now actually is quite good, because we actually, for example, family office is no need to have a license. We need no need to grant a license from SRC. If this is a single family office, if you are mounted family office, you have to grant a license. So this is different, but this is very encouraging. If we are a single family office and we are just support our pioneer to invest some areas, if we need also governed or regulated by SRC, it will be like now to us, because I spent 20 years to play with the game with SRC. I know what they are doing. So it's still very encouraging with the government to do a regulatory support things with the single family office. I think this still remain unchanged. recently, I think the government, maybe the atmosphere, the financial atmosphere, or the political uncertainty is not very stable at Hong Kong. So the policy or something idea is change by change on an everyday basis. So sometimes from an investor or from a institutional investor's perspective, we actually cannot catch up very tightly. Like what we say about the CIES, we also prepare for 2 years because we also focus in these kind of areas. But when you heard about the government to announce the policy at the very initial stage, actually it's very blurred and very uncertain, and we actually have no ideas. So many institutions like insurance company, banking areas, everyone also want to get prepared to invest in SCIES, but really don't want to know how to do it. We have no idea at a very initial stage, but of course ongoing, and right now we have already have a compactly have a clear picture right now, but still or nothing. I really honestly say that. So we like to now it's not compared with 2015, that's the RDS scheme. You are not that easy. I really told everyone and share. I think you guys in this industry also can experience and can acknowledge one thing is compared with the previous CIES scheme. This is more difficult. Although government is like to boost up the policy, but when you are going to be a practical areas, this is not easy. Like if your investors, if your applicants is from China, they have a nationality from China, but they have passports in overseas. So the thing is, like the problem comes. So how about the source of funds? Can these schemes, because we have a lot of family analysis asking, they want to move their money from China to Hong Kong or to overseas, to Singapore, everywhere they really want to move out. This is the practical needs at the moment. We really have need, this is their needs. So they really want to through the CIES scheme to move their money and want to also have the identity in Hong Kong, or the Hong Kong is a stepping stone and they want to go to other countries. So the problems comes. So the source of the money from the CIES in China is through these cases directly from China to the CIES. The answer is no. And then when you heard about the announcement from the China press conference, they are very blurry and not very indirectly to tell you about. They accept the legal gateways when the China people they had got overseas passports. But about the source of money, of course, have to be already landed to overseas. So this is the problem comes is how about the Chinese that pool of capital to go to Hong Kong. So we are so it's a nightmare. We are so still our team also thinking about these issues about how to help them, and then how to in legal way, of course, to help them to relocate the access from China to Hong Kong. So this is the questions one. And the other questions is, although the government is really help us to boost up some financial things or encouragement in the industry, but the operations level to ours, I think in industry people, actually it's not very practical. It's not easy to do that at that moment. It's really difficult for women. So I believe it's a challenge in Hong Kong. But we still hope, I hope, because the CIS scheme is still in Hong Kong, and I connected with a lot of immigration company both, and then we also link up with an insurance company, and they really have a good structure and well established their organization and also their good products, and then we can merge with them to cooperate them to see how it goes. So it still is encouragement from the government.
Thank you. So basically more practical guidance from the Hong Kong government to support the industry players. So yes, please.
Yeah, sorry, I just want to write on what Kenix mentioned. 2 or 3 more bullet points. In terms of the lack of clarity, for instance, I think the new CIS scheme is compulsory that you have to invest 10% into a technology fund. However, I think, correct me if I'm wrong, I think up to today is still unclear or unknown that if I'm ready for the 30 million, where can I invest? Which fund? HSBC?
Of course.
HSBC, JP Morgan, Schroders, Fidelity, or whatever, right? So it's still a question mark, even until today. No more.
You can come see me afterwards if you like.
Yeah. Where's the number? That's number 1. Number 2 is that I think on comparative basis, 30 million, I think, to be truly honest, I think in relative term is on the high bandwidth. I would say 30 million, which is 3 million sterling or 2.5 million euro. So is actually quite high. And thirdly, I totally 1,000% agree with Kenix that the fund flow from China to Hong Kong is a big topic that needs to be resolved for sure. Yeah.
Thank you. Fund repatriation is definitely one of the key topics that need to be considered when setting up the family investments. So any other thoughts on this?
Besides the fund flow and the procedure of how to move the money to Hong Kong, I think the government can also set up more scheme for Hong Kong startup or even any institution, the financial support. Because I think as all we know, government funding in technology or in incubation more likely focused in science park and startup board, and then they may work with some universities such as the Hong Kong Tech 300 at the CTU. This is all the funding, more likely all the funding which is government provide. But I think government can provide more funding in more and cooperate with more university or set up more incubation center. In the 2024 budget, a new government will set up a auto computing center in Hong Kong, and it costs around 300 million. And I think this is a good move for government to start focus on technology-wise incubation to encourage the Hong Kong people to make startup and start a new business. And I think if you guys also know that government raised a plan in last year around April, which is called RainForest. They are working with the 8 universities in Hong Kong. The funding is around 10 billion. So that, which is, I think this is a good move. But for the execution, what I saw is they will use a long procedure to assess the company, and then the startup must endorsed by the university. So this is a long procedure for the startup to get the fundraising. So even until today, they didn't make any investment in the startup because around 1 year. So you can see the cash burn for the startup is a very critical problem. All the startup or even not a startup, traditional business, they are in cash flow, which is quite tight. So that if government can provide more scheme like RainForest and the execution can be more faster, it will be great for all the startups and for all of us. Thank you.
Yeah, so basically more funding and streamlined procedure.
Yeah, riding on what Benny said, I think I might not be 100% agree with Benny that there are not enough funding. Actually, in my understanding and my experience, is that there are so many funding schemes in Hong Kong. Point of one. However, technically, very few people know how to apply for this funding. There's so many, so nobody knows how to do that. Okay, there's a gap, number one. Point number two is, to me, is even more important, is a structural issue. For instance, I think most of the funds in overseas, Silicon Valley, Korea, Singapore, they give you the funding upfront. Okay, Hamasa, equity, whatever, right? I give you, you are on the startup phase. After the proof of concept, I give you $5 million US, you go and expedite your growth, okay? And grow faster, whatever. However, in Hong Kong, what I noticed is that a lot of the funding, number one, is over installment, quarterly, 3 years. And then, most importantly, is it has to be on, you spend it, and then you claim back. Think about it. Then, for a startup, as Benny and Kenix mentioned, what is the most important thing? Cash flow. Okay? And let's say it's a $5 million over 1 year thing, right? How am I going to get the $5 million from my own to grow my business? I need the money. That's exactly the pain point. I need the money to grow my business. Then now I need to spend it first, and then I claim it back later. That is very difficult. And also, there is no ecosystem in Hong Kong called factory. That means I use the proceed from the I use the proceed from an external party, and I pledge as collateral to a bank, and then I get my upfront, 80%, 70%, whatever, right? But that's not possible yet in Hong Kong, in that scheme. Reason why, because the bank cannot estimate, or the bank cannot assess the risk of, because every quarter, you need to get the approval from the government. So it's not a definitive, definitely yes that you're going to get the money every quarter. And that's why the bank is not able to, the banks are not able to grant you a factoring kind of facility or financing. So I think that's the big point. Money is there, the government is really willing to help the tech, the startup, the good technology company in Hong Kong, but very few people to be able to, to tap that pool. I think that's a big point right now that I've seen in Hong Kong.
Right. Thank you, Kelvin. So yeah, basically a lot of the government funding is on like a cash matching scheme. So you have to spend first, and then you'll be able to demonstrate that government and be able to obtain funding. So that's a point well taken. So maybe that's why they need the bank to help, right? To getting a little bit more money to help them with the finance, operation, etc. So Peter, from a venture capitalist point of view, any other thoughts on this question?
Okay, well, I'll put my HSBC hat on for a second to sort of represent the bigger story rather than just Series A or even Series B capital. I think one of the things that HSBC as a brand has been really making a lot of positive progress on in Hong Kong is related to the acquisition of Silicon Valley Bank. You may have seen that in the news over the last year or so. Innovation banking is a new capability which is bringing a whole new mindset of corporate or commercial bankers into the bank that you all know and love, but which is a new innovative way of looking at venture debt and new types of products for new economy companies. So enabling the founder to gain funds that are non-dilutive, which founders love. They love to keep ownership of their company while get capital to facilitate the cash flow of high growth businesses. And then, obviously HSBC's business banking is quite prolific in Hong Kong. Banking companies straight out of CityU or the Science Park or Cyberport at a zero revenue, very early stage. The HSBC's business banking has hundreds of thousands of existing clients in Hong Kong and is trying to grow quite rapidly. But I think what's more important here is that if you think about the life cycle of a company, whether you've got revenue or you're burning revenue or you're starting to get into growth and you're becoming profitable, or you need capital to buy a competitor or to acquire a business in another market, or you want to grow to Singapore or Dubai or the UK, you need some partner that can help you do that. And so that's one of the big, selling points of the bank. Now, banks are inherently risk driven, right? So they're not going to provide a whole lot of risk capital to startups. That's not what they are known for. That's what venture capital and angel investors and risk capital is all about. But I think one of the things that we are noticing is that over the last few years, there's been a pivot towards businesses that are profit generating. And the tolerance of investors to invest for 5 years or 8 years or 10 years in capital-intensive businesses that just burn enormous amounts of money and in the hope that they will one day take the title and win the market. I think that era has passed. Even venture investors are looking for businesses that have at least line of sight to profitability or break even. They're looking for businesses that have got good fundamentals and that are able to generate revenue and not just spending at all costs. We've seen a number of industries fall over because of a lack of core fundamental business understanding. And I'm sure a lot of people here in the room, the way you run your businesses is, it's about paying attention to cash flows. It's about looking at where you're going to generate revenue. It's not just about burning investor money and expecting another round of investor money to solve problems this year that you're going to create for next year. So I think the bank is very committed to this market, this region, and I think there's a lot of opportunities for high growth new economy businesses today.
Thanks Peter for your sharing. So basically, AI and data, etc. These industries are still very popular, but we need to better manage cash flows, especially for investment perspective in this current market situation. Okay. So in the interest of time, perhaps just a quick final thoughts or tips for the audiences here about investing in Asia going forward. Maybe Kenix first.
The tips. I don't think this God knows. I think in Asia, I just only based on my company, just back to my current firms and even because I have no position to say about anything. But my company still focus on. I still believe. First, Hong Kong have its own strength, so don't discourage ourselves. The tips on the investment in the area, we still focus, very strongly focus in AI, biochemistry. Our company also, before we also put a lot of effort, put a lot of areas to invest in consumption area, but now it's a little bit draw out. We focus on more in AI. So this is the global trend. So we have to still follow very attached in that areas. Yes.
Yes, I won't say I'm this, but my opinion, which is, I think if we invest in Asia, we should carefully select the industry we invest. For example, we must select some more technology-wise or ESG-wise. For technology, you can invest, I think, in biotech, fintech, which is called insurtech, which is quite famous and hot topic in this period of time. So I think you have to select the industry carefully. And then secondly, I think the risk control will be the second important, because based on this year, there are many scam or fraud case or some crypto issue. So all of us should select carefully. And also risk control will be the main issue for all of us. Yes, thank you.
So I think, tips. I think nowadays is if you tell me a financial forecast over 3 years, that's not realistic. Okay, so I think back to fundamental. If I were to look at a new project that whether it's investable or I would invest, I think management, track record. 2, whether it's going to generate cash flow, strong cash flow. 3 is the price. Okay. 4 is the sectors, of course. What the sectors is at the start of of the growth cycle, or is it sunset or whatever, right? I think pricing is a very important issue, because now we're on the top of wall for IPO. Okay. Secondly is and more importantly, we're on the pull and push on a lot of down rounds from the secondary market. For those that should have IPO 3-4 years ago, and the pandemic, blah blah blah, and now because these companies, a project, they need to raise up to to sustain the company, make sure it won't go bust, right? So, and then we're facing a lot of not facing turn, and we have tremendous, a huge number of opportunity in the secondary market that is maybe 1/3 or 1/4 of the valuation 3-4 years ago. So I'm an investor. All I want is I want to make money, right? So why would I invest into a pure startup, not very rating, but instead I can invest it, but instead I can invest into a company that has 5-6 years of proven track record, proven concept, and proven financials. IPO maybe in 18 or 24 months of the same valuation, right? So yeah, so I think a good business model that can convince the investor, and most importantly, I think back to the liquidity issue. A lot of people, what we're looking for in terms of investment, same business, do stuff, right? However, what is the exit strategy in 4 to 5 years? That's a must to me or to my team. What is the 4 to 5 years exit strategy then trade sale, IPO, or buyback provision and an interest. And by the way, usually we will ask for that provision nowadays. If you don't IPO in 3, 4, 5 years, I need my money back, plus, I don't know, 8% of interest. So I think that's how I witness of the current market. Yeah, thank you.
Thank you. So, final thoughts of Desmond.
Okay, two tips. If you're an investor and you've never done alternatives or venture capital, just know that there are big brands that can, support you with that sort of stuff. And that alternatives are a great way of betting on Hong Kong and the next 10 years of growth in the Greater Bay. If you're a mentor or an advisor or a founder, then have a good data room and reach out and talk to as many investors as you can. And those investors, the best investors that you will meet will give you good, honest advice on the gaps that you might have, or even help you develop some strategies that you might not be thinking about, which you need to get investment in, which it doesn't matter what sector you're in, you should have an AI strategy.
Thank you.
I want to add on something. So in Hong Kong, through the CIS scheme, I learned from my investors and my family members, they always ask for one question, and they also still very interesting. Although I think in Hong Kong, people, they still hold or still under their observation in real property markets. But for the CIS scheme, most of my clients, especially PRC clients, some of them from Malaysia, some of them are it's very certain from Singaporean. If they want to do the schemes into Hong Kong, it's still interesting in our property markets. This is what very interesting because no matter they think that they need to invest in the bonds, whatever they investment instruments, they know that nowadays the investors, they know how to play the games, and most of them they know the principal names. So they not really about the investment instruments, but they probably more interested about our property markets. They still have a very strong needs because they think that about the whole of the land is scarcity, but the demand is still very high, and so they still very hold up their hopes in asking about although the allocation of the assets in CIS scheme to the properties area is limited, but they still very focused, not asking me about Kenix, what about the LPF and what you want to invest in what area, which areas, the technology, what area it is. They most likely jumped into what the properties. I know that is I can't purchase resident properties, but how about commercial properties? What kind of suggestions you feel can suggest us? Can you sort of some good areas, and can you give us some comments or ideas of the properties industry? This is a kind of very interesting areas from my family members, and also as well as the investors of the family members. So I still believe and strongly have trust on the real estate market in Hong Kong.
Thank you. Just to end with more positive forward thinking, the financial secretary in Hong Kong just mentioned there are more big enterprises coming out to Hong Kong. Basically, there are around 20. They call it strategic enterprises, startups with very good revenue track record that will be coming into Hong Kong to boost further investments. I believe that they will do a public signing ceremony on this Wednesday. So at least we can all look forward to more investment opportunities, and the market sentiment will continue to grow better and better in the coming future for Hong Kong and the rest of Asia. So thanks very much, everyone, all the distinguished panel speakers for the sharing. Thank you.
Hi, please, I would like to